How's it, guys? Welcome back to Aspire's YouTube channel. I'm Liam.
And I'm Keown.
So what we're going to be doing today is we're launching our Where We're Heading Wednesday series with our first episode. So what Keown's done is broken a couple of things down for you guys.
Yeah, so I've broken down where we'll be heading on the dollar, gold, as well as also the major cryptocurrencies. So check it out. Where we're heading Wednesdays. Today we're going to be starting on gold as well as also looking at the DXY. So just jumping into the weekly time frame, what we can see is pretty much from the dip that we had last year during COVID, we've printed that higher low, and then we've had the run up into the highs of August. Since then, we've obviously had this descending channel. So what we've observed in the prior weeks, prior month, was we've had 0.1, 0.2, and we've had the third rejection off of the bottom end of this channel, as well as we've also run into these June lows. So around 1670 to 1690, little liquidity region. If we drop down to a daily time frame, what we can see is we've come into the trend line, reversed, and then we've had that second rejection forming the double bottom. If we look over here, we can see that we've broken the neckline. So we had a break above, pullback, higher low was formed, accumulation below this level of resistance before we had a blow up. Now, as you can see right now, we are rejecting the highs. 1785 is a significant level to cross. We can obviously see this level of support now acting as resistance. If we just lift it up, this level, we are looking for closures above so that we can see a continuation into 1800, 1815, and then potentially into the upper end of this channel. So just go to the weekly. You can see we've had our first test of the double bodies over here. If I go to the line chart, we've just retested that peak. So it'll be interesting to see how this week closes. If we have a closure above, I definitely see price coming into 1800, 1815, and as I said, the upper end of this channel. So just going down to a 4-hour time frame, what we can see right now is obviously double bottom was printed, but if we look at the overall trend, we have been creating lower lows, lower highs. As of now, we have created higher high, higher low. But if we just plot a downside fib, we are retesting the 78.6. So we just need to be careful with long in this market right now. It would be a lot better if we had that confirmation of a break above, retest the support, and then continue. Right now, being Wednesday as well, we could have a mid-cycle reversal. So looking at this, we may have from the significant higher low to higher high, pull back into 1750. That would be if we had to break as well around 1750. You could even look at these levels just above 1760. Drop into a 1-hour time frame. Take this away. What we'll also note, just jumping to a daily time frame again. Yesterday, we had spike below the prior daily low. So if I go back to a 1 hour from here, you'll see that we printed the low, 19th. Then we've come up, we've tested once, twice, 3 significant tests, bullish engulfing, and then we've had the run up into these highs over here, where we had our initial sell pressure. So this leg is pretty much completed, and now we're just looking for a retracement and a nice clear higher low before continuing into the highs. If I jump over to the DXY, it can be a bit contradicting, as a lot of traders are looking at if your DXY is rising, technically you should have gold going lower. However, what the case has been, if I just add 10-year yields to the chart, with a rising bond yield, we should see inflation and we should also see rate hikes. So this would be positive for the DXY. As we can see here, if I just jump to the monthly time frame, we've had significant bounce once, we've retested the high, and now we bounced again. As you can see, nice 3-pin pattern, bullish engulfing, and now the current month we have retested the prior monthly open. So there is going to be a lot of liquidity sitting around this 91. If I just put that on the chart, also a nice significant level. Taking that down to a daily. And what we can see right now is had a bit of consolidation around this order block. If I put on the fib, here at SPY we have been looking at downside from around the 93 to 93.5 handle. But as we've approached this downside and we're seeing a rising yield, we may actually see reversals and a trend higher in the dollar. So just applying a fib here, you can see how we've had rejection off of the 61.8, rejection off of the 91, and we may potentially have this leg back into the upside. So a lot of people are wondering now, why would you have a rising dollar and rising gold? If we have a rise in interest rates and a rise in inflation, an interest rate hike is going to be positive for the currency. Inflation is going to be positive for gold. So generally with inflation, we're going to be using gold as an asset to hedge that. So a bit of confusion for some beginner traders. However, it is something to look at. I do believe we can have a bounce on the dollar. If this level fails, I will still be looking at the 89.60. However, if we break 90.50, significant level to actually push us lower. We also need to take into account, if we look at March, we had massive stimulus. We've also just had new stimulus approved. So this may also allow for a lower dollar. However, with net buyers and sellers being at an all-time high for shorts, it is becoming a higher risk to reward or a more rewarding trade to actually be long on the dollar. So that's gold and the dollar for right now. With a lot of requests, I also want to jump onto Bitcoin and Ethereum. So if we just look at the daily time frame right now, we've obviously had a massive run up, breaking the prior all-time high. We've then had significant pullbacks over here. However, there was a lot of panic selling. Applying a fib, we can see that we had retest of the 78, retest of the 78, back above, new high, pullback, higher low, and we continued. Now, after creating these highs, we've started to consolidate and have a rising wedge. As you can see right now, we've had breakouts. So the massive fundamental shifts that we've seen in the crypto market as of right now, for Bitcoin specifically, we've had Turkey saying that it will ban the use of cryptocurrencies as a form of payment. We've also seen concerns around the SEC cracking down on money laundering that has been carried out through cryptocurrencies or digital assets. And then the main cause that we've seen for this crash on Sunday was actually blackouts in China. So a large amount of miners situated in Xinjiang, if I'm not mistaken, there was a blackout which caused a 49% drop in the hash rate. So this has caused a massive dive out of this ascending triangle for Bitcoin. Technically, we could see, due to this breakout, a push lower. Now, the push lower will be quite significant. However, if you are looking at the overall trend, we are still trending to the upside. So we need to take that into account. However, if we just take this away and we look closely, we've created higher high, higher low, higher high. We've had this massive push down, but we haven't actually broken structure yet. So we haven't actually created a lower low. Although we are outside of this ascending triangle, there may be more buying pressure over here. Also, something to take note of is when we had this bottom put in on the 7th, if you take note of the liquidity, as well as also on the 8th, where we had this push up, lower liquidity than what we've seen in these recent days. So I do believe there is more order accumulation on Bitcoin right now. I would be wary to be buying at these prices. I'd rather have clear confirmation before going higher. So right now on Bitcoin, I'm sitting on my hands, awaiting to see if we have pullbacks. What I would be looking for as well, if we just put this on, so we've had drive 1 pullback, we've had rejection, second rejection. We may have a third rejection before continuing into our targets of roughly 70 to 75,000. If I take this away as well, one thing that I will be looking at is this daily order block down here. So just looking at where we had this order accumulation before bouncing off and creating the new highs. If we have a pullback into this region, again, we're going to be breaking below the 78.6. A lot of people are going to be panic selling. If I just switch over to the fib that we use in indices, there is a massive potential. We have this push, pick up orders, take out stop losses, and then we can have this run into the highs. So that's one thing that I am going to be looking on Bitcoin. So if I just take everything away as well, in the monthly, I do believe that we still have further upside, roughly into about 100k before we enter a bear market. So that is Bitcoin. Just going to jump over to Ethereum right now as well. Very similar, where we've seen this rising wedge essentially. However, price action is looking a lot more stable. So you can see from the yearly open, massive run up. Here again, rising triangle, but we actually had breakout, retest of the low, and then continuation. This is also another play that could potentially play out on Bitcoin, is if we manage to come back above this point, we could just have that retest and continuation. So that's also something to look out for. Going back to Ethereum though, the main fundamental shifts that we've seen for Ethereum right now, or a bit of hype that's building, is due to what we've seen in Canada. So we've had 3 Ethereum Etfs that have been launched in Canada. So this is an exchange traded fund. Exchange traded funds essentially just allow you to have exposure to one or more digital tokens without requiring the investors to manage the digital asset themselves. So this is going to help massively towards mainstream adoption. A lot of people aren't interested or don't understand how to actually store their digital assets. So ETFs are going to be a massive shift for adoption. If we look at the daily time frame, technically we've had obviously rising triangle, breakout, retest, and we've started to trend higher. You can see here we've broken above the highs, consolidated, new high made, retest. You can see how this wick coming just below these lows over here, liquidating traders using leverage, and then we've had the shift up. What you'll also notice, if you take note of the bodies on the line chart, we have had orders being collected below once, twice, 3 times, and then we have shifted to the upside. So price action is still looking decent for Ethereum. to continue its run. What I would be anticipating is something very similar to this, where we have this rising wedge. We may even consolidate between here before having breakout with a retest and then continuing into the highs. So that's Bitcoin and Ethereum. Lastly, I just wanted to look at Doge and what actually happened. Yesterday there was massive hype going on around how we were going to go all the way to $1. If you just look from a 4-hour perspective, we have these highs printed over here. If you look at the line chart, and then if we drop down to an hourly, we have this level all the way to the left where we've had breakthrough. We've retested as support before continuing higher. And as you can see, if we drop down to a lower time frame, we've had this massive hype where we've seen buy the rumor of 420 Doge Day, and then we've seen sell the news. So nice little wedge building up here. We then actually broke out, and from here we had this mapped out to break out and come back into that hourly level, which literally played out to the T. So guys, with coins like this, there isn't any utility, so you need to focus on projects that are actually having a real use case. One thing to also just take note of is when people are saying this is going to go to $1, you need to take into account what the market cap is. So at the current price of just under 32 cents, we have roughly $41 billion in Dogecoin, which means if we had to go to $1, we would need another 82 billion to enter the market. So we just need to be realistic with our price targets, as well as looking at what is the real life use case. We've already had a massive run up on this coin, which was actually made from a meme. So there is also going to be a massive crackdown, in my belief, from the SEC with regulations. So yeah, this isn't the best of news. A lot of people are going to be caught holding this bag at the highs. So just be careful when investing. If you are going to take risky gambling plays like this, I do suggest using a very small allocation of your portfolio. So that is it for where we're heading Wednesdays, guys. I hope you enjoyed. Don't forget to like and subscribe, and if you want to find out more about courses or any of the services that we offer, the links are down below.